What's going on, everybody? It's Stas here. So in this video, we're going to be breaking down a bunch of recovery stocks that I'm looking to buy right now as the economy is slowly but surely getting back to normal. And by no means am I saying it's all sunshine and rainbows, dandelions, sunflowers, everything is all beautiful and dandy, because that's not true, guys. We're still in the middle of the crisis. The CV is still at large. There's no vaccine quite yet. And for these recovery stocks to recover, right, we're going to need the consumer to have confidence to be able to travel, go out, shop here, shop there, and do a bunch of different things. And quite honestly, the consumer is not quite there yet, which is why a lot of these stocks, the businesses themselves, are struggling right now. So if you guys find value in the video, hit the like button for me, subscribe to the channel, and check out all the free links down below: the Strive Smart Discord chat, the Strive Smart Facebook group, and if you guys want some free money, check out the link. You can get 3 free stocks from WeBull valued up to $1,600. All you have to do is deposit $100 using that link, and you get your free stocks. So without further ado, guys, let's get right into it. And we're going to start off by talking about Airlines. And you guys can see right on my screen right here, we have Southwest Airlines, ticker symbol LUV. And they actually just reported earnings when I'm filming this video, the day I'm filming this video. They had EPS of negative 199 versus the negative 235 estimated. So they beat there on EPS, and revenue also beat. Revenue came in at $1.8 billion versus the $1.7 billion estimated. And get this, guys, they're losing money on the bottom line. EPS was negative, and the revenue's not doing too great. And last year, this is the crazy thing, the kicker here, guys. Last year, revenue was EPS was 1.23. So we saw a big drop from a year ago, comparing it to this year. And revenue, guys, was $5.64 billion. So that goes to show people aren't traveling, right? Last year they had $5.5 billion roughly in revenue in this quarter, and they just had 1.8. That is unheard of, right? That's more of that's a 3x decline there. 1.8 plus 1.8 is 3.6, plus 1.8 is right around 5.4, right? So they're not doing nearly as well as they were last year, and the stock price is reflecting it, right? Before the crisis, we were at $58. We crashed down to about $22, and we have recovered to $42, but still, we're down a pretty big chunk from that high. We're still down about 30%. And let me show you this interesting thing here on TSA.gov. This shows you the TSA checkpoint travel numbers for 2020 and 2019. Just take a look at this, guys. Total traveler throughput on the 21st of October, which was yesterday, the day before I'm filming this video, right under 700,000, right? And take a look. Last year, in the same time period, October 21st last year in 2019, we had 2.2 million. We had 2.2 million total traveler throughput, which is unbelievable. Literally, we're down over 60-70% this year compared to last year. And if you guys were looking at these numbers back in April, they're scary, guys. The traveler throughput. Take a look at this. I mean, this is unbelievable. 92,000 people. This is when the crisis was really at large in the beginning, when everybody was freaking out. 92,000 people compared to a year ago in that same time period in April, it was 2.2 million. Let me tell you that again. 92,000 people in April of 2020 went through the TSA checkpoints, and a year prior to that, 2.2 million. So as the recovery in travel comes underway, right, as people get more confidence to travel from the U.S. to Europe to wherever, Asia to Australia, or even within the U.S., right, because people are still scared to travel within the United States, as we get that confidence back. Maybe whether it's from a drop in cases and the you-know-what as that fizzles out, or as a vaccine comes in, right? I believe these numbers are going to go back up. And I'm sure many of you guys could agree, right? Again, at this point, we're between 700,000 and on the high end, 1 million in total traveler throughput here in October 2020. I can see when a vaccine comes out, there's more confidence in the next couple of months, right? And cases drop, hopefully, right? I'm praying, guys. I really hope so. We might see these numbers go from 900,000, 600,000, maybe to 1.5 million, maybe 1.75 million. And as we see more volume, going through the airports and so forth, companies like LUV, companies like UAL, United Airlines, right? These companies are going to just naturally gain more revenue, more money, because there's just more volume. People are getting that confidence to go back out and travel. Even with companies like AAL, right? And even SAVE. There's so many companies out there that are in the airline industry that are really relying on this. And you'll notice, right, relying on people and the demand, right? And you'll notice a lot of these recovery stocks, they're really focusing on and relying on two things, right? CV slowly starting to drop off, go away, the fear around that going away, and a vaccine, right? If we get those two things, not only will the airlines do well, not only will consumer confidence come back, but we'll see a lot of other businesses do well. Hotels, airlines. I just said airlines, restaurants, right? The hospitality industry. There's a lot here, guys, that's suffering. Energy, right? We'll talk about that in a little bit. So watch out for these airlines, LUV, UAL, SAV, pretty much the entire industry. And on top of that, if we get some sort of stimulus package, maybe if you're watching this, we already got it, right? That helps out the airlines. We might see a short-term spike in the stock prices as well. So just keep an eye on these airlines and also on a bunch of retail names. There's a couple of names here that I'm watching heavily on this potential recovery that we're going to see here in the next couple of months. I'm watching Ulta. Ulta is a company that I've been vocal on my channel for months. I love this company, right? I've been trading in and out of it for a couple of months. I haven't recently, to be honest, but a couple of months ago I was trading it a lot. And this is a company that I think as foot traffic increases across the states here, I think Ulta has a lot of opportunity, a lot of upside headwind. And you guys can see, 230 is holding as support right now. We have a big resistance at 250. And if 250 breaks, as well as 270, 265, these two levels have been resistance for the past couple of months. That's where I think Ulta has a lot of headwind back up to the 300s, at least towards that $300 level. So I'm watching Ulta here. Another one that's just been beaten down crazily is Nordstrom, guys. Unbelievable. Nordstrom was at $41 before the crisis, and it went down to $13. It popped back up, and it's been extremely volatile since then. It popped up to 21, back down to 15, up to 25, and now we're actually, we already did take the March lows out. Was it March? Actually, no, it was in the beginning of April. We took out those lows. We actually hit 1172 back in the end of September, and now we're pretty much right where we were. We're right at the bottom. We're at the low here on Nordstrom, although it is up today about 7.5%. We're still down a lot, guys. We're still down a lot, and it really relies on the foot traffic. Same with Ulta, and honestly, the e-commerce, right? People buying online. I'm sure a lot of people obviously have been buying online with Ulta, with Nordstrom, and a bunch of other retailers, but they're really relying on that foot traffic, which needs to kick up for the sales to kick back up and for us to see some sort of upward momentum. So I'm watching on Nordstrom very closely here, guys, very closely. This could be a nice play, maybe back up to the $20 range in the short term, especially as we get more confidence around vaccine and so forth. And a couple of other ones here in the retail space. We have WBA, Walgreens Boots Alliance. This one's been being down a lot. It's slowly starting to recover now. They just reported earnings. I have to double check. I actually didn't even look into their earnings, but they just reported earnings, and since then the stock's been going up. Here we go. EPS of $1.02 versus 96 cents. So they beat there on EPS, and revenue came in at 34.7 versus 34.37 billion. So a double beat there on in terms of EPS and revenue for Walgreens Boot Alliance. And again, this really relies on foot traffic, right? Going into the Walgreens stores and so forth. And maybe we'll see a recovery here. This one's very similar to Nordstrom. It's very close to those lows. And quite honestly, guys, this is one of the only stocks, I mean, there's a bunch out there, but one of the only ones that I track that has been downtrending the whole time pretty much. You know, we've seen tech stocks, we've seen other stocks initially drop back in March, April, rally back up and stay there. But this one, it dropped back in March and April. It popped a little bit, but it's just been downtrending the whole time. And yeah, that's kind of been the story here with WBA. And another one is CVS, which is very similar, right? It's been beaten down back in the crisis, in the beginning of the crisis. It was $76, dropped to 52, rallied back up to about 71. Now it's on a downtrend, right? From 71 to about the high 50s. So I'm watching out on all of these, and from my memory, they all pay. Actually, I'm not even going to say that because I don't know exactly which ones do pay, but I think CVS and WBA, they pay nice dividends. JWN, they might have cut it. And Ulta, I think they pay a little one. I just have to double check, and maybe I'll put some screenshots up here. But yeah, retail, I'm looking at Ulta, Nordstrom, WBA, and CVS. And when it comes down to some restaurants, guys, you all know I'm a fat kid at heart. I love my restaurants. Let's talk about Cheesecake Factory. This is one that I've been buying personally since the $20 range, $20, $25, maybe a little bit as it cracked, $30, a little bit, but at this point, I feel like I've built my position out. I'm letting it ride, and they actually just got a buy rating, I believe, from UBS and a price increase. Actually, no, that's wrong. It wasn't from UBS. They got a price target raise from Wedbush from $26 to $31. And honestly, guys, I think Cheesecake Factory is one of those that is going to recover well. I mean, we've seen a lot of demand in the stores. One thing with the from picking up, rather, not in the stores, although yeah, the stores are open now across the country for the most part, but we've seen a lot of demand from ordering online. But one thing that is a bit risky with a lot of these recovery stocks, guys, is if we see a prolonged CV. Let's say it drags longer than we thought. We don't get a vaccine. Maybe we get another big lockdown here, a shutdown in the U.S. and in other countries. That is not going to be good for any of these stocks that I'm talking about, guys. It's just the truth. It's the sad truth. But if we get another lockdown, if things go sour, a lot of these companies are going to do poorly. But we're optimistic here. We're banking on the recovery, the vaccine, the CV going away. And if that happens, guys, airlines, retail, restaurants, they're going to see a nice little snapback. And it's already starting as of now, as the country here in the U.S. at least has slowly been, releasing the restrictions across the different states. Some more than others, but hey, it's slowly being released across the states here. So I'm watching Cheesecake Factory. That's the main one that I have here on my notes for restaurants. And I'm also watching Wynn Resorts, WYNN. I think there's a lot of pent-up demand for people wanting to travel, like we mentioned earlier with airlines, and for people to go out and have fun, for people to go out, gamble, especially the wealthier demographic. That's what Wynn really targets. I bet you they want to go out, travel, gamble, just have a fun night out, right? And Wynn has all of those amenities, from casinos to this to that, across in Vegas to Macau. It's all over the place, Boston, right? So I think a lot of people are going to be going out, gambling, doing their thing, right? I'm not a big gambler when it comes to casinos, but I know a lot of people are. And in terms of Wynn, I mean, it went down from $137 to $35. It popped up to about $110, which was crazy. That was a nice rally in the recovery stocks. But since then, I mean, it's back down to the mid-70s. So my theory here is travel is going to spike up. People are going to be flooding into Vegas, as Vegas is just really the capital for partying and just going to casinos. Rich people go there and they just blow their money. I think that's not changing. If anything, there's a lot of pent-up demand. People are itching to do that. So Wynn is at the top of my list there. And we could also talk about the cruise lines. I mean, cruise lines are taking orders here from people for 2021 for the different fleets, right, that are going out, especially Carnival Cruise Line. And Carnival Cruise Line is down from $44 down to about $15 now. So this one could definitely be on the list. And some banks, right? We have JP Morgan. As the economy strengthens, you could expect banks to do well. JP Morgan today's up 3.7%. We could also talk about Bank of America. These are a couple that I'm watching. And notice these haven't recovered nearly as much as some other stocks. Hence why they're in the recovery stock video here. And also, I'm looking at energy, guys. Energy is important in my eyes, especially as travel kicks in. A bunch of other businesses that use oil heavily kick in. I think oil is going to do well. I think energy is going to do well. And these companies are very similar to some retail ones that have really that are really still at the lows from back in March. I mean, take a look. Exxon is down about 50% from pre-crisis levels. We have Chevron as well. I forgot the ticker on this one. I think it's CVX. Yeah, CVX. We have Chevron is getting crushed. And mind you, a lot of these do pay dividends, but the dividends are at risk. Let me just be honest with you guys. The energy dividends are at risk at this point, so be careful there. But again, as travel, as the airlines, as the cruise ships start running back up, energy is going to do well, in my opinion. But it is risky because, again, with all of these stocks, they're depending on vaccine and CV going down and consumer confidence coming back up. So if you're willing to bet on that, and another point here is a lot of institutions are heavy growth, right? And maybe if we see that rotation as we get more signs of vaccine, if institutions start rotating into, I think they will. The question is when will they? But when they start rotating from growth into some of these names, we're going to see that pop. We're going to see that shift in the trend. And hey, that could be a time where we start to ride it, guys. So overall, that's it for this video. If you all enjoyed it for me, hit the like button. I would really appreciate it. Make sure to subscribe to the channel and check out the Strive Smart Discord chat, the Strive Smart Facebook group. Those are free of charge to join. Link down below. And you can also get, don't forget, guys, your 3 free stocks from WeBull, valued up to $1,600. All you have to do is deposit $100, and that is when you get your 3 free stocks. So I'll catch you all in the next video. Thanks for watching. As always, stay safe out there, guys. Peace out.